turbulent couple of hours as everyone digested its 1Q report. And the topic of the day is really password sharing, when it's going to be implemented and what the impact is going to be. And I think you saw with the immediate negative reaction that there's a lot of interest in this being a success, particularly as subscriber growth slows in tier one markets like the US and Western Europe. Looking at the Sensor Tower data as it pertains to metrics that relate to password sharing, we see Netflix continuing to have best-in-class loyalty and engagement amongst the streamers, which should give the company some confidence that previous users who've been sharing passwords would convert to full or ad-supported users because of Netflix's content. And what some of those metrics are at Sensor Tower, we have a churn analysis metric that looks at month-over-month churn. Netflix is about 10 to 15% better than Hulu, Disney, and Prime, its large competitors. It has much better time spent, almost 2 to 1 across those versus those networks. And those are all really positive indicators. And Netflix on the call pointed to its engagement as a reason why it thinks it could use password sharing as almost a backdoor way to take price.
But it's going to be so important this next quarter when it does come to this whole subject of password sharing and then Netflix's actions to that effect. Do you think that Canada is going to be a reflection of what we can expect in the United States in terms of the churn, or is it because of timing, because of the macroeconomic climate, because of that increased competition that it could be a little bit painful for them in this quarter and then into the following quarter from that, even though, and I'm not suggesting that it's not a sound strategy for shareholders?
Yeah, well, I think that there's definitely the potential for it to be a little rocky, particularly at the outset. I mean, one thing we saw in the first quarter is that some of Netflix's secondary and tertiary competitors in the streaming space are doing really well. Max has a lot of compelling TV offerings. Paramount Plus saw gains with live sports for Premier League and the NFL. Those aren't to the scale of Netflix, but they do matter. There's a lot of options in the streaming market in the US, and any friction for Netflix users could be a reason for them not to use the platform anymore. And also, if you look at the Sensor Tower data for active users in Canada and in New Zealand, we do see slightly accelerated declines looking at March and April versus January. That could be from password sharing restrictions, but it's a little early to tell. So there's definitely the potential for there to be some concern here. But I do think, again, those loyalty metrics are really stellar for Netflix. So if it kind of is able to implement these password sharing restrictions in a common sense way, there's definitely benefit from a pricing and just an overall profitability perspective.